In today's video, I'm going to show you a simple way to take advantage of our Volatility Box models to trade 0 days to expiration options. For this exercise, we'll look at SPY, DIA, and QQQ. Now, for the actual Volatility Box models, I'm going to be looking at their futures equivalent charts, and we'll start with our Scalper Volatility Box models loaded on. If you're new to our channel, the Scalper models are the most aggressive Volatility Box models we have, and they're simply giving you the green light that, hey, it's okay to scalp. We have 5 different models, and they range from scalper to aggressive, and they go down the line all the way up to our doomsday conservative models. Now, the whole idea here is we're looking for a Volatility Box breach. That's a breach of the sign entry lines. For the first 2 hours, the S&P, fairly muted activity, just a little bit of back and forth chop. Now comes the 8 to 9 a.m. Pacific hour, and in this hour, we see some sell-side activity kick in. Now, the sell-side activity gives us a breach inside of the ES futures, gives us also a breach inside of the NQ futures. If we take a look at the Dow has the most volatility out of all of the markets, the index markets, and the Dow also had a breach here, but the one thing you should notice different in the Dow is the Dow goes on to break outside of its Volatility Box model clouds. So without even going further, you know right off the bat, just looking by 8 a.m. Pacific, which of the index markets is more volatile? Is it the S&P, the Nasdaq, or the Dow? And we got to answer that very easily by just noticing price go outside of the clouds, telling you that, hey, sellers here don't have a lot of strength. Now back to the S&P 500. The one market, by the way, out of the 3 that gave you an entry was the Dow. Again, staying true to this volatility fact. Now in the S&P, we had the Volatility Box models breached towards the end of that 8 to 9 a.m. Pacific hour. We have price action breach our models. You can see price start to stabilize. You start to see some lower wicks. You see the momentum cross with the 3 EMA crossing above the 8. And we see the edge signal confirmation with the green arrow. Now, at this time, the at-the-money calls for SPY, the at-the-money 0 days to expiration calls, were the 541 calls. These 541 calls appreciated in value from right around 60 cents all the way up to a max value of right around $1.60. Very quick gain here with very little heat. The whole idea was waiting for that right entry point. And in the S&P, that entry came when we had the Volatility Box models being breached. Now what's interesting here is with our fade setup, for example, we didn't really see our rules being met. We saw the edge signal, but we never got the retest that we typically wait for. In the Dow we did, but in the S&P, the Nasdaq, not so much. So these 0 days to expiration options are another way to try and take advantage of this zone right here, which I've talked about in a previous video, as your entry. It's a way to expand your entry. You're taking on additional risk. With futures, that's harder because every single point has a value tied to it. With options, you have a little bit more fluctuation there, and you can take advantage of a slight pricing before that optionality is actually kicked in and get a price that would be better than what you might have to pay for with futures. In the case of the S&P, that was a risk of about 60 cents today, 60 cents for the 0 days to expiration options. Now, if we take a look at the Dow, which was the one market that's slightly different, the Dow was different in that in the morning, we had a breach of our upper models and we saw selling kick in. That tells you the scalper model is being respected. Again, we had a long side breach. We saw buyers step in here. Again, telling you the models are being respected. Now comes the next hour and we repeat this exercise one more time. We get price breaching our cyan entry line right here with this red candle. We see the edge signal confirmation, but one more time, we don't get that retest of the cyan line before we've already hit T1. One way to take advantage of this retest move, again, using those 0 days to expiration options is a way to be slightly more aggressive. Now, inside of the Dow, at the end of that hour, that's where price action continues to break outside of its models. We don't see sellers defend this level. Instead, we see buyers able to go outside of the clouds. That tells you that, hey, now the opportunity for scalping in the Dow is no longer. Volatility starting to pick up. We need to adapt to that volatility. We switch to the aggressive Volatility Box models. Now, in the aggressive Volatility Box models, in this 8 to 9 a.m. hour, we get the entry that actually gave us our fill at the cyan entry line. We have price breach our cyan entry line. We have the edge signal arrow. We get the entry at the cyan entry line. The stop on this particular trade was right around 40 points, 37 to be exact. We made a max move to right around 64 points. We did not hit T2 in this particular Dow trade. We get that retest back up to break even, and that's where any remaining contracts are taken off. Now, for those of you, again, trading the 0 days to expiration option, I think you would have had a nicer gain here than what the futures offered, simply because you're looking at getting that gain very quickly for an option that's expiring soon. Finally, we take a look at the Nasdaq futures here. And inside of the Nasdaq, you should notice something very similar to the S&P. Chop in the morning, we get that selling activity right before the lunchtime hour, and you see that straight up V-shaped reversal before that lunchtime hour has even made it halfway through. So there you have it, a few different ways to use 0 days to expiration options with the futures volatility box models to mitigate the risk just a little bit when that fade setup doesn't give us an entry. I hope for all of our futures volatility box members, this gives you some more ideas on ways that you can be a little bit more agile with the volatility box models and make them work for you and your trading style. Take care, everyone. Good luck trading, and I'll see you in our next update.